Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
Now let's look at channel trading. And I used this for a couple of the previous examples when we were looking at support and resistance and that sort of thing. And you can really see that even though we're not looking at a directional trend such as a strong uptrend or a strong downtrend, we're still seeing these waves of buying and selling where you'll have two waves of selling, two waves of buying, two waves of selling, two waves of buying, over and over again until the momentum starts to shift. And usually you'll see this within a congestion move. Oftentimes you'll see a series of 3 to 5 of these. In this case, we have the 5, 1, 2, 3, 4, 5, where we've got 2 up and 3 down. But sometimes it'll just be these initial 3 here, and then you'll see a channel breakout. And it really just depends on how this forms right in here. If these were slower downside moves, you had the 2 waves of action on the downside that were more gradual, then it could have broken out on the upside more quickly, coming out of the move marked D here. So momentum and the percentage of retracement is really impacting the type of activity that is going on here. We have this larger correction, and it pulls all the way back to this previous low. So when you have this type of V move, and it begins to rally with approximately that same momentum, there's a higher chance that previous high is going to serve as a resistance level and give us another top. Now, maybe the momentum could have shifted here at that point. We might have had 2 waves of pullback within this and led to a bounce higher. But we've got this V formulation here instead. But this is just showing you some of the different variations of what we could have seen form here. Looking at this in more detail, let's look at how you can use these 2 legs of buying and selling as actual trading strategies. Now, to begin with, we had a very sharp upside move. And when we look at the overall momentum of this correction, it is more gradual than that rally. So there's a higher chance that you're going to get some sort of pop coming off of a 2-wave correction that can serve as a trade. Now, because this momentum is still stronger than average, or at least average, it's harder for it to break through this previous high no matter what, but it can still be really good as a scalping type of position. And in this case, since we're looking at a daily time frame, obviously, we've got multiple day holds forming, so we're looking at swing trading strategies. Intraday, this would be more of a scalping type of strategy. But you're dealing with a smaller time frame than like a larger trend move per se. Now, going into this and looking at actual trading triggers, notice even that the momentum shifted right here at the lower end of that second wave of selling, where we got a lot more overlap in price. And this is a really good indication that you're starting to see things kind of tighten up, that you're going to have a better chance of seeing a decent bounce coming out of it than if this just fell sharply and then tried to pivot immediately, because that could have been a little bit more of a trap, and it might have done like a little series of slightly lower lows. So the fact that it congested here a little bit and slowed down in this kind of mess right here is actually really good for a breakout higher. And to take that, just draw a channel, and then the last bar, you want not only the channel to break, but you want the last bar's highs to break as well. So that provides the confirmation for the move. Your stop is going to be under that second low, unless you have some sort of smaller base or something in here that you can use as a support level. Second, you have another setup over here again. Same type of thing. Notice that here's one drop, here's a second drop, and within that second drop we even have 2 little drops. And so again, channel break, And if you have a big channel, you can use that last portion of the channel as your break. And you also want not only that channel break, but also the previous bar's highs. In this case, again, they tend to be about the same place. Stop is under that low. And then there's a final one over here as a buy. Here's the channel break. There are actually 3 little waves of downside heading into this low in October. And the channel break is a little bit before that bar's highs break. So your entry is actually a little bit higher than the channel break here. And so these can be used as examples of how you would enter these reversal type of strategies. Obviously, some traders are going to be looking at things like these absolute pivot highs and trying to take those. Those are going to be a little bit higher risk if the momentum is still really strong. We have a little bit of a trap type of pattern here where you've got a slightly higher high, serves as a 2T and leads to a reversal. But the best ones are going to be where you have those more gradual channels, because you're often going to see the strongest follow through on that. Like I mentioned in the previous slide, when this rallied here, this overall move is a pretty strong move. So this could have entered a trading range or congestion phase and not really offered that rapid reversal. It just opens it up for a higher potential that could give you a more gradual correction. Because when we look at each of these moves here, they were actually slowing on the downside. So this wouldn't have been an ideal short here at the end of August, because the momentum was suggesting that there was the risk that it could have led to more of a consolidation type of range. Now, of course, we're just looking at this brief period in time, and looking at the overall trend that was taking place on a weekly and a monthly time frame would give you a little bit better of a heads up as to what the larger outcome of these are going to be. But when you're just looking at this intraday or this congestion on this chart alone for this daily time frame, that's one of the risks that you would have had. And it's a rather substantial risk when you're just looking at this one time frame. So it's always really important to look at multiple time frames, because something that might look perfect or might be a risk factor on one time frame, your opinion might change substantially when you go and you look at another time frame. The larger time frames are going to hold more weight than the smaller time frames. So if you have a smaller time frame setup that is in the same direction as a larger time frame bias, you have a stronger setup. It's not always going to nullify it if it goes against it. You have counter trend moves all the time. But it will give it a little bit better oomph and make it a stronger setup if you're going in the direction of what the larger time frame biases are. So here's another example, and in this chart I want to talk about timing your targets. Now, when we're looking at support and resistance levels, I mentioned very briefly the concept of equal moves. And this is what we are seeing play out here very, very clearly in these back and forth moves. And it works extremely well in these because the momentum in most of these moves are very comparable. Your initial drop or your initial rally has a secondary move that is approximately the same momentum as the first. So when you go and take the lows and the highs of a move and add them on or subtract them, you're getting very clear-cut targets. And notice over here in September and into October, you don't have it hit that equal move target. It doesn't quite make it there. That equal move target would have been about 99. But the reason it doesn't make it there is because the momentum shifted. You had a slower momentum follow-through on the second wave of selling than you did the first leg of selling. And because that momentum shifted, it wasn't able to hit that target level.
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.